3M stock offers investors a robust 5.8% dividend yield. But is this dividend yield safe for the long term? Well, that's the question I'm going to answer in this video. So let's get right into it. Looking first at the most vital metric that I see when I'm judging if a dividend is safe or not, and that is the proportion of dividends per share to earnings per share. I want to see how much earnings are outpacing dividends. And for 3M, it's by a lot. So what I have here in the purple is 3M's earnings per share over the last decade. And you can see it's clearly higher than its dividend per share for that same period of time. So 3M's dividend policy, even though it offers investors a robust dividend yield, there is still room for the company to increase its dividend or to just sustain the dividend over the long term because the company generates sufficient earnings to support that dividend. Another thing I look at when I'm judging the safety of a dividend is the cash flow from operations to sales. I want to see how good the company is at generating cash flows from sales. And 3M does a solid job of this. In fact, if you look at it before the economic reopening gained momentum in 2021, the company was increasing this successfully for several years. Now 3M, you might be surprised, it benefits significantly when people are buying things, right? Because its products are in many things around the world. And it's less benefiting when people are going out spending money on services like restaurants, theme parks, concerts, and travel. So that's why 3M's prospects have diminished over the last year and a half or two as economic reopening gained momentum and as consumers switch their spending habits. But I'm not alarmed at 3M's ability to generate cash flow from operations in the long term. They also have a legal dispute that could cost the company billions of dollars. But again, those would likely be one-time expenses that the company would pay, and then it could find its way back to generating profits, generating cash flow, as it has done so successfully for many decades. And the final metric that I'm going to show you here that I'm going to consider in judging whether 3M's dividend is safe or not is the total long-term debt compared to the cash balance. And judging this, I don't see any alarming figure for 3M. It has 15.96 billion in debt with roughly 3.8 billion in cash. More encouragingly, you see its debt balance has been going down. The company's done a solid job of not only paying dividends over the last several years, but it's also been paying down its debt. So you had debt of over 18 billion around January of 2021, and that's come down by around 2 billion down to 16 billion. So again, looking at its earnings and its cash flow, the company generates plenty of both to pay dividends, pay down debt, and do so for the long term. So to answer the question I posed in the beginning of this video, is 3M's dividend yield safe? And it does appear to be so. The company generates sufficient earnings and cash flow to support its dividend payment. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.